Hello, everybody, and welcome to day one, week one of Realtor Training Series on loans and how you can use them to get more business. I'm Paula Hune. I am the creator of this series and also the most wonderful loan officer on the planet. Just kidding. Kind of. I am pretty awesome. But I wanted to I'm also very humble, so I don't wanna boast too much, although no one does loans better than me. Uh, so welcome to the first edition of the FHA and conventional myths busted training. This is part of a six-part series where I'm going to give you real information about these many different types of loans. And not so that you can qualify your buyers for them. I don't want that. That's my job. Your job is to sell a home. So what I want you to do is use the information and give you information that's going to help you do that. Either get more listings or get more buyers, and a combination of getting more offers accepted. And I think that's the missing piece. I think we're all really good at getting buyers. We're all really good at getting houses to list. The missing piece is how we negotiate and how we present our buyers, especially FHA buyers and VA buyers and USDA buyers, to our listing agents. So hopefully throughout this six-part series, you will all figure out and use some of these tips and tools to help do that. All right. So again, I'm Paula Hune with Funding America Mortgage. I've been a residential mortgage loan officer since 2012-ish, working for a small bank. Actually, it was a local bank. It wasn't that small. It was a local bank, one of the largest Philadelphia-based banks out there. It's Beneficial Bank. Then I moved into the independent mortgage bankers world, and now I am with a brokerage, Funding America Mortgage, where I have access to many different lenders and many different loans. That's another reason why I wanted to have this series, is because I feel that we need to educate the realtors on what is even possible out there. And it's a lot. I geek out over these things. I get super excited every time I get a new email with a new program or product, and I can never share it with anyone. So now I'm sharing it with you. Okay, so first up this week, it's FHA versus conventional myths busted. FHA and conventional loans get such a bad reputation. Uh, More FHA than conventional. I get that. Um, And I kind of want to kind of dive into why. Like, why does FHA get a bad rap? And, what are some myths that we have about conventional that may be a little off? Do we really know everything there is to know about conventional? Um, again, in the mortgage world, I tend to think that people like automatically know what I know. We don't. So today is about cutting through the noise, empowering you to use financing myths to your advantage, right? You're going to walk away knowing how to spot misinformation and how to turn it into marketing. That's the fun part. All right. So why does this matter? Right? These myths, these lending myths, they cost you commission, right? In the form of lost offers. Okay. Maybe you were on the listing side and you poo-pooed a deal because it was a loan that you didn't know, understand, a lender you didn't know or understand, or you felt that, you fell into one of the myths and didn't think it was quote unquote good enough. You also miss marketing angles. You could be marketing to different clients all the time in a different way by using these myths. People love education. If you go on TikTok, if you're a TikTok user, and if you post a lot on TikTok, you're going to notice they are offering different awards and, cash dollars for different types of posts about educating clients. Not necessarily, might not necessarily be your thing, but like I saw one on plants, horticulture, like people teaching people how to grow plants. The best video or whatever gets like $2,500. Guess what, guys? There was one, I don't know if it's ended or it will be ending really soon. There's one on financial advocacy. You can do a financial advocacy post, right? Maybe get some extra cash on the side just through TikTok. But you can do a financial advocacy post, um, and get people smarter, bring people into the world, get the clients you want, or take your clients you have and make them the clients you want, right? So these are missed marketing angles that can cost you thousands of dollars. And then misinformed buyers, misinformed buyers, but also misinformed sellers, right? If you know a myth, or if you think a myth, or if a seller has a myth in the back of their head and you don't have the knowledge to be able to correct that, you're going to miss opportunities. They're going to miss opportunities. A buyer's going to miss a potential for a home. A seller's going to miss an opportunity for a buyer that might be giving them more than what they wanted just because we didn't know. And it happens all the time, unfortunately. So every time an agent repeats a bad loan myth, someone loses a deal. So understanding the truth helps you guide clients better, and it will win more accepted offers. All right. So let's go into these myths. I'm really trying to keep this in the 30-minute um, threshold, because I know your time is valuable and so is mine. So we don't want to go too long on these, but it's important to go over. And especially these next two slides are my favorite. I wish I was smart enough to do transitions and all that fun stuff. I hate when people post slides that I could just read, but you're going to get a copy of these because you're going to turn this into marketing. Okay. So let's take the first FHA myth, right? FHA offers are weak offers. How many of you have ever heard that? How many of you have thought that? Well, FHA buyers often bring higher earnest money, use gift funds, and close just as fast with the right lender. Yes, they can close just as fast, just as seamless as conventional with the right lender. You got to know who you're working with, and they got to know their process. I've been in business a very long time, and especially over the past 6 years, have streamlined my process, and has made my process so important to how I help my clients. They cannot move on to the next step until they do the first step. So having a loan officer that does those type of things, that have a process already in place that can guide your buyers to make the right financial decision is super important. And that's what's going to make FHA close and have FHA be the stronger offer. Okay. How you flip it, how you market it, very simple. Your offer strength isn't your loan type. It's how we package it. So that's a headline, right? So if I'm marketing this, if I'm doing some social media posts, that's my headline. Your offer strength isn't your loan type, it's how you package it. Maybe I do a video. Maybe you get me to do a video for you and you introduce me, whatever. That's kind of like your hook. Okay. And then you kind of go into why the package and how we're packaging the deal matters in how you are presented to a seller. That's going to build you confidence with buyers. More buyers are going to want to use you as a realtor because they trust that you are going to present them in the best light possible, no matter what loan they're using. Believe it or not, they care about that. All right. Next one. FHA appraisals always fail. Okay. I I have a love-hate relationship with this one. Yes, FHA appraisals do dive into more safety issues than conventional, right? But they really do look at the same standards for the most part, right? FHA may have extra minors, like they're going to look on the exterior more than a conventional loan would. um, Peeling paint, missing handrails. If you want a guideline for your sellers on what an FHA appraiser looks at, I can get that over to you, and you can put that in your listing presentation. Aha, more ways to make you look more professional. And you can have the client fill it out or go through it with them to determine if your house is going to be listed for offering FHA financing. Because if it's a $500 fix, and you already know about it, you can tell them, hey, fix this. We'll get more offers. Some will be conventional, some will be FHA. But we know that we'll be able to take the FHA and conventional because, again, FHA buyers are not bad buyers. You can close in just the same amount of time, and doesn't mean they have, we're going to go into this a little bit, doesn't mean they have bad credit, doesn't mean they're terrible people. They're good offers. Okay. Yes, the appraisal does stick with the home. Yes, the appraisal does um, look at other safety features. But if you do the listing part correctly, right? If you do your listing appointment properly, and if you do your comps, and if you're confident in your numbers, okay, you're going to have no problem accepting an FHA offer, right? I would recommend going to that appraisal if you're a realtor who took on an FHA offer. Maybe when you go to schedule it, you don't just let the appraiser go, you go with them or you meet them there so that you can listen to what they're saying. You can have some comps ready and prepare yourself for it. I'm going to be dead honest. Okay. Truth. And again, I've been doing this for a long time. I've rarely seen an FHA deal die at appraisal. Okay, this is reality. And I have done hundreds of loans. They don't die at the appraisal. Some of them can. Sometimes it is impossible to renegotiate. I get that. Okay. I'm not saying it never happens. What I'm saying is with the right prep, you can make sure it doesn't die at appraisal. Okay. With the right mindset, again, you can make sure it doesn't die at appraisal. You can still save that deal because you've prepared your seller, you've prepared your buyer for what could potentially be needed. Okay. Let's not have a deal die because there's a little bit of chip paint on the garage out back that takes $20 to fix. Right. Let's get real. All right. So, how do you market this? Right. Well, you use this to reassure the sellers. Okay. When you're positioning that offer, and if they're pushing back on FHA and they say, oh, can your buyer go conventional? You say it's not about the loan, it's about condition. And most homes pass easily. And if that listing agent listed a home and accepted your offer or is thinking about accepting your offer and they know there's going to be issues, shame on them for not preparing their seller. Okay. All right. FHA loans take longer. They don't. FHA turn times, they're identical to conventional. They're how many people have thought, oh, or have been told by lenders, loan officers, licensed loan officers. Well, this has to get approved by FHA. They're probably spinning some information. It's not they has to get approved by FHA. It has to get approved by the underwriter. Now, if you're talking a condo and you're doing a spot approval, yeah, that has to get approved by FHA. Or maybe there's a guideline question that your underwriter asked FHA for more guidance on. That's different. FHA does not look at the file. They don't take the file. They don't flip through it. They're not, there's no extra step in that. It's not FHA. That's not what they do. Okay. It's the underwriter, it's the lender. So they can take as much time as conventional loans. And again, using the right lender, with a good process that is going to make sure that the client is pre-approved, that we have all our boxes checked, that we um, looked at the income, we analyzed the income, we analyzed the assets, we analyzed the credit. And again, I'm not saying we looked at the sheet of paper and said, oh, okay, look, I have a pay stub. No, we actually look at it and analyze it, run it through the automated underwriting, things like that. That's what you want your lender to do to make sure it closes on time. Okay. And again, you can do a post idea. This is a great marketing post. Don't let outdated myths slow you down. FHA can close in 15 days too. I wouldn't say 15 days. Please don't. Although, yes, that's a potential. Conventional also doesn't close in 15 days all the time. Yes, there's a potential to do that. But I would say 30. Let's be real and most deals will close in 30 days. I remember the time when 60-day was the norm. And like anything under 60 days, you had like a panic attack. And now it's almost like expected, like you can't do it in 30 days. Come on, guys, let's not shorten the time any longer. Just because we can doesn't mean we should in every instance. Okay. So my post would be don't let outdated myths slow you down. FHA can close in 30 days too. Right. FHA is only for low income or bad credit. Oh, I can't tell you how many times I've heard this from the sellers because I do call my sellers agents when my clients put in offers and I talk to them. They're like, well, why is this person going FHA? If they're, well, one of them was why are they were putting like 20% down. Why are they going FHA? What's wrong with them? FHA, there's nothing wrong with an FHA loan, right? It's not about income. It's not about structure, right? Or it's not about income, the credit, the assets. It's about the structure, right? For many mid score buyers, it simply delivers a better overall payment. Okay. Yes, FHA and conventional both allow 3% down. Don't misinterpret that. So it's not always about the down payment and not having enough money. Sometimes they do have enough money. Sometimes it is their credit. But again, just because the credit works better with FHA than conventional doesn't mean they have to go conventional. If FHA offers a lower payment, they should definitely go FHA. It's all about that client's finances. Okay, so smart buyers use the program that gives them the lowest monthly cost. You can also say smart buyers use the program that offers the lowest monthly cost with the least amount of out of pocket cost. That would be smart because, again, we don't want to waste all of our money on our house. We don't want to be house poor, but we also want a payment that's going to be manageable as well. And that's what we do. So again, just because you see an offer come through, if you're the listing agent, that does not mean that that client is not a good client. Does not mean that client's not going to pay their bills. Doesn't mean they have crappy credit. Okay. All it means is that this is the loan that fits their needs the best. Okay. You can't use FHA for condos or fixer uppers. So, all right. So, a lot of condo divisions are approved already with FHA. So, condos have to be pre approved with FHA in order to go through. However, they allow for single unit approvals. I'm doing one right now. Some condos with the single unit approvals have limits to how much FHA concentration they have. So, your lender needs to be aware of that. But honestly, again, we call them spot approval or single unit approvals. It's not going to slow down the deal. They usually take if the lender knows what they're doing, it shouldn't take any longer than just getting the regular condo questionnaire filled out on a conventional loan. In fact, I've seen that take longer than getting a single unit approval through FHA. Um, Fixer uppers, hello, 2 or 3K. I'm pretty sure that's on my agenda as well to do renovation loans. I love renovation loans. Yes, there's FHA 2 or 3K, but there's also the home style. Renovation loans are fantastic. Okay. And you use this in marketing. Sell the ugly house. FHA can fix it. Right. Again, using these myths, you can flip it to help your marketing. Okay. So that is FHA. Let us see what some conventional myths are. Okay. So conventional, perfect credit only. Oh, this is my absolute favorite. The minimum credit requirement on a conventional loan is 620. 620 is your minimum credit. And yes, I have done plenty of conventional loans at that 620 mark, right? Buyers with average credit can still qualify. Rates are adjusted based on the risk factors like credit score, down payments. That doesn't mean they're disqualified. Okay. Um, Again, there have been many times when I've had buyers who they do have to go conventional, right? Because there's no changing that listing agent's mind. They're dead set that FHA is evil, and they've convinced their sellers that FHA is evil. We have to go conventional. Well, guess what? Sometimes, if that's all you can do and it's the house of their dreams and it checks all their boxes of their needs and their wants, you got to do what you got to do. So we can make them go conventional. Good credit doesn't have to be perfect credit. That is a fantastic headline. Could you imagine doing a video and how many clicks you'll get on YouTube or TikTok with the headline, good credit doesn't have to be perfect credit? Oh my gosh. I can tell you right now, you'll have at least 100 within a week at minimal. At minimal. I would probably even say 24 to 48 hours. I might even do a video on that and prove you guys. So be on the lookout for that. But again, You don't have to have perfect credit to go conventional. A lot of times you might need a little more down payment. You might need a little more in the savings. Um, you might need to have strength in your debt to income ratio, right? But it doesn't automatically mean they're going to go FHA. And you need to know that as a listing agent too, just because you're accepting a conventional loan as an offer, that doesn't mean they have perfect credit. It does not mean that that deal is going to be seamless. Because also, just so you know, anyone who is doing any what we call non-qualified mortgages, which are just the ones that are they're different types of mortgages, your DSCRs, your bank statement loans, um, things that are out of the ordinary that aren't going to go to Fannie or Freddie Mac. They will come, those pre-approvals come through as conventional loans because they are technically conventional loans. So just because you offer a conventional loan does not necessarily mean it's going to be seamless and no issues or anything like that. 20% down required. This, I can't believe this myth still exists, to be fair. I feel like we have done a great job of dismissing this myth, but I guess it is still there. First time home buyers, they go as low as 3% down with conventional programs like Home Ready, Home Possible, or if they are first time home buyers. Um, Home Ready, Home Possible, you do not need to be a first time home buyer for. Um, and you can put down 3%. Uh, if you're a repeat buyer, so if you're buying up, buying down, 5% is your minimum. All right. The other cool thing is on investment properties, or sorry, on duplexes with Freddie Mac, I believe the down payment is 5% down. That's another cool thing. If someone's trying to do the whole buy a 2-unit, multi-unit home, have someone pay the rent, um, that's a great tip. So again, real idea. You don't need 20%, you just need the right plan, right? That forces you to look like the expert, which is what you want with with your buyers, with your sellers. You want to be the expert. All right, PMI. PMI lasts forever. PMI is private mortgage insurance. Private mortgage insurance is on conventional loans. Mortgage insurance is on FHA loan. Okay. Mortgage insurance on FHA loans that lasts for the life of the loan. PMI does not. So it does not last forever. Once you have 80%, once you are at a loan to value or you have 20% equity in the home, you can call and have the MI removed. They don't necessarily have to agree to it. You may have to refinance to do it, but it is an option. It will automatically, without you doing a thing, fall off at 78% loan to value. At 80% is typically when you can call. Okay. But when your loan naturally amortizes to that 78%, that means you made your payment every month. Usually takes about 10 years, 7 to 10 years. That MI is going to fall off. Okay. If you think you have that equity, you have to call and request it. If they're going to say no, then you gotta refinance. All right. But how do we spin this, right? You can literally give yourself a raise by dropping your PMI early. Do a video, explain how you do that. You're going to be a hero. Okay. Sellers prefer conventional loans offers. Sellers prefer certainty and clarity. They they want the certainty and clarity. They just want to know it's going to close, right? They don't really care about the loan type. We put the loan type on them. We tell sellers you don't want FHA. FHA, you're not is not going to appraise, or they're going to require too many repairs. That is not being clear to them. Right, and we don't and it's not saying you're doing anything wrong. So if you have done that in the past or if you do that now, you're not doing anything wrong. It's just you're not giving them the clarity of it. You're not telling them, explaining them the real whole thing. Okay, they're not being certain. They want certainty, they want clarity, right? They don't really care about the loan type. A buyer with a strong pre-approval and a responsive lender look just as solid. Okay, sometimes even stronger than someone offering a weaker conventional pre-approval or pre-qual. Think about that. Right. So confidence wins contracts, not the logo on the loan. I really like that. I mean, I don't love the logo part, but I really like that. Not the loan type. Great. It's a great video hook. Conventional is always cheaper. Oh, I love this one, especially in the market right now. We're seeing margins decompress. So not always. It depends on the buyer's credit, income, and goals. Okay. Mid score or lower down payment buyers, FHA can actually mean a lower total monthly payment. I do this all the time with every single buyer. I compare, okay, where would we be with a conventional loan? Where would we be with an FHA loan? Sometimes I start people on FHA and then we flip it to conventional because the house they find is cheaper and it just fits. Okay. Sometimes I start conventional. And then again, depending on the house they find, I flip it to FHA because I'm like, yo, I can get you a much better interest rate, like sometimes a whole percent lower. Okay. Going for like, well, whole percent lower. And even though you're paying a higher percentage in mortgage insurance or the mortgage insurance, which again, I said does not go away, um, the monthly payment out of pocket total is still cheaper than going conventional. Plus, the out of pocket total can be a lot cheaper as well. So again, here's a great post. Sometimes FHA beats conventional at its own game. I think that's a cool headline. It's definitely a great hook. It's something to get you talking to these buyers, to these sellers. All right, I think I have like 4 minutes. All right, so we were gonna do some some back and forth. I wanted to know what your myths were that you've heard, and then have the opportunity to change marketing hooks. But again, I want to be respectful of your time. If you do have myths that I did not go over that you want to know, like, okay, how can I flip this? Give me a call, shoot me an email, shoot me a text. Um, you'll see the link to my link tree, which will have all my contact information on it at the end. I want to know, what are you hearing? What are these things that you're hearing about these loan types, any loan type? And let's see if it's true, number one. And number two, even if it is true or not, how can we flip that to a marketing campaign? How can you be the expert? Let's find that out. Okay. Remember, it's not about the loan, it's about the strategy. You're going to write stronger offers and communicate better with listing agents. Okay. Knowing about these myths, decoding these myths, and knowing what to say is it's your golden ticket, right? Knowing how to pitch it to a seller when you're trying to do an FHA loan and they're hesitant is how you're going to win. And include your lender to it. Okay? Have the lender in on that call as long as you trust that they're not going to do things like um over talk, say too much, things like that, right? You want them to be very confident, very strategic about what we say and how we pitch the deal to the listing agent, right? Educate your sellers on the reality of the offers, right? Don't just poo poo the FHA loan or don't poo poo the USDA loan or VA loan. Okay. We're going to do USDA and VA later, but educate your sellers on the reality. Yes, FHA appraisal, they're going to look at more things. You will have to paint that chip paint. You may have to tear down your dilapidated garage in the back. Um, Whatever it is. Again, you'll have that checklist. If you request it, I can give you that checklist and you'll have it for your agent, for your clients to go through. Um, and it's a really great tool to use when you're on listing appointments, to get an idea of, what the client actually knows about the property, right? And thirdly, use the strategy to grow your business. Market. Market right now and market hard. If you do like a post a week and you share that post and you are smart about it and you have a great hook, I guarantee you're going to get recognition. You're going to get people looking at you. You could potentially get 1 to 2 deals by the end of the year just by focusing on how you market. Okay. I know a lot of people are heavy on Facebook, Instagram. That's fantastic. Why not expand into the world of video, YouTube, TikTok? I can do a whole one-to-one with you about your marketing if you'd like. Again, you just need to reach out to me. I will go over it. I'll take a look at what you're doing now. We'll grow some ideas on what you can do to make it better. Because again, I'm 1 minute in. So, any questions? Feel free to email me. Feel free to call me. Next week, we are going over business owners by two, helping your self-employed clients win. All right. Self-employed clients, they don't always fit the W-2 box. I love this training because I love the bank statement loan and all the other products we have to help our business owners. All right, thank you. The only thing I'm going to ask is if any of these tips really do help you win a deal, if you do some marketing and that marketing wins you a deal, my only ask is you think of me to help with that loan. Okay. You don't have to. I'm not going to be offended. I love training people. I think the more realtors we have out there that are trained and knowledgeable, the easier all of our jobs are. So I don't mind doing these, but I would love a little thought would be great. All my contact information are on the QR code that you can pause this video and scan it, or you can do it right now on your phone. You'll have access to my website, my application link, all of my socials, all the fun stuff. Thank you very much. Glad to spend this 30 minutes with you, and I look forward to seeing you all next week.